Good evening, everybody. And on this day, maybe we should say willkommen or bienvenue, because today was all about Europe and a massive new stimulus program unveiled by the European Central Bank, designed to help jumpstart the region's sputtering economy. Now, starting in March, the European Central Bank will buy upwards of $70 billion worth of government and private bonds every month for at least the next year and a half, or as long as it's needed. Now, that aggressive stimulus, which could total more than $1 trillion, was even more than global investors expected and helped stocks here and around the world move higher today. On Wall Street, here are the numbers. The Dow soared 259 points, with the utilities index setting an all-time record high. Today's 83 points gain in the NASDAQ and 31 points for the S&P 500 were enough to wipe out all of January's losses for those indexes. Steve Liesman now with a closer look at what's in the ECB's bond buying plan and how it will work.
The European Central Bank finally put its money where its mouth has been for the past 30 months. Way back in July 2012, ECB President Mario Draghi promised,
"The ECB is ready to do whatever it takes to preserve the euro."
Today, amid declining inflation and anemic growth, Draghi sat before the world's cameras and announced a sweeping $1.2 trillion program of bond buying, or quantitative easing, designed to shock Europe out of its funk.
Taken together, these factors should strengthen demand, increase capacity utilization, and support money and credit growth, and thereby contribute to a return of inflation rates towards 2%.
At the heart of the plan is the purchase of 60 billion euros or $68 billion a month of bonds, mostly the debt of the eurozone's 19 member governments. And it will last for at least 18 months. But Draghi, hearkening back to his whatever-it-takes promise, said it could last even longer, until the ECB is sure it's on the path to its 2% inflation target.
Looking ahead, today's measures will decisively underpin the firm anchoring of medium to long-term inflation expectations. The sizable increase in our balance sheet will further ease the monetary policy stance.
Draghi has managed to execute a plan over the objections of the ECB's biggest economy, Germany, which worried about the inflationary effects of such large purchases. And German Chancellor Angela Merkel, moments before Draghi even announced his plan, cautioned her European neighbors that the ECB's program wouldn't let them off the hook for enacting important structural economic reforms. Despite telegraphing the move for months, Draghi even managed to surprise markets. The euro fell to an 11-year low, and Italian 10-year bond yields dropped 16 basis points to just 1.6%. Stocks soared around the world, but there's skepticism. The ECB has been habitually a day late and a euro short. If indeed Draghi and the ECB are out front, it'll be the first time since the financial crisis began. For Nightly Business Report, I'm Steve Liesman.